Hello everybody, in this video I'm just going to be doing a brief stock analysis on Wynn Resorts, and this is not by any means going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as the industry, and I do make tons of brief stock analysis videos very similar to this one, so be sure to come and check out my channel if you do enjoy it. And first off, I like to take a look first at the 5-year chart just because I'm more geared towards long-term growth. But their 5-year chart here is a little bit of a disappointment. You can see 5 years ago they were at $72, and then in the middle of 2018 they were over $200, and they saw really slow growth and decreasing growth in the Chinese markets, especially in Macau, where they're really huge, and they really have not recovered since. So it's definitely not a good story for long-term investors looking for a lot of growth. But that definitely does leave room for value investors. As you can see here, the stock started out at the beginning of the year almost at $140, and then in March, when the overall market was down, it dipped all the way down to $36. So if you got anywhere close to $36, I would say you definitely got in at an incredible price. And even now, I'd say the stock still has some room left to grow as more and more people are flooding back into casinos. And then I wanted to take a look at the revenue and earnings here on Yahoo Finance year over year. Definitely seeing some great growth from 2016 to 2018, and then really no growth from 2018 to 2019. I think they even lost a little bit of revenue, and then earnings were a big disappointment in 2019, which is why I think there was a lot of pullback during that year. And then at first glance, their earnings are really suspicious. In Q1 of 2020 here in the US, most companies were unaffected until the very end of Q1 or the second half of March. But if you think back to China, they started dealing with COVID back in December. So it does make sense that in Q4 of 2019, they already started seeing the effects of COVID. And then in Q1 and Q2 of 2020, seeing much more of the effects in the US here as well. And then next up, I wanted to talk about a few points by the bulls and the bears by analysts at Morningstar, looking at it on Robinhood. And the first two positive points here I don't think are really strong points, especially from a long-term growth perspective. The first one here is that the company's focus on the high-end luxury segment of the casino industry allows it to generate high levels of revenue and EBITDA, and I think you could really say that for most of the casino stocks that you see. You really don't see any kind of economy casino brands out there, especially ones that are publicly traded. I wouldn't even be able to think of one. And then the next one is that Wynn Resorts is positioned to participate in long-term growth in Macau, which is absolutely great, especially when I take a look at the next positive point. But again, when you think about it from a long-term growth perspective, especially on a global scale, for them to just be growing well in this one market is really not going to see a ton of growth for the stock, even though they are pretty focused on Macau. And then they have a narrow economic moat, and this is solely due to, well, I would say their brand as well, but also because they're one of only 6 companies that have licenses that are allow them to operate in China, which I think is pretty crazy. There's no telling how many there are here in the US, hundreds, I'm sure, but only 6 in China, and Wynn has one of them, so that's pretty incredible. And then I also wanted to talk about a couple of bearish points as well. The first one being the unknown duration and extent of COVID could affect the leisure and travel demand, which is definitely true, but I'd say that's kind of already priced in, and it's priced in right now that the recovery is already well underway. And then the next point is that Wynn's VIP focus in China makes Wynn more sensitive to economic conditions as well as interest rates. And if you think about just over a year ago, I think it was, there were trade wars going on with China, and that definitely could happen again in just a year from now, which will vastly negatively affect Wynn. So that's definitely something to keep in mind. And then lastly, I just wanted to show the research report overview here on Robinhood. I kind of already talked about the narrow economic moat and uncertainty being high, but the fair value is really interesting here. So we just saw that the stock is already at about $90. It may be a little bit different when you're seeing this video, but around there. And then the fair value is at $110, and I would say it's actually even higher than that, probably at $120 or $130. But for those of you who are thinking they can invest now at $90 and see 100% return, I would say it's probably too late for that. I would say you probably needed to invest closer to $40 to really see an incredible return. So you could still invest and hope the dividend gets reinstated and hope to make a little bit of money, but probably not going to see an amazing return here. Let me know down below if you have any questions or comments about the video. Subscribe for more content, and thank you so much for watching to the very end.